Trading charts. You've seen them before, but they always seem like mythical creatures that move up, down, sideways, and are impossible to understand. How exactly do we read them, know what they mean, and gather useful information for trading and investing so we can be the ones holding stacks and stacks of money? Welcome back to the Trading Project. In this video, I'm going to explain everything you need to know about trading charts as a beginner. I'll be covering different types of charts, how to read candlesticks, timeframes, and analyzing a market trend. Understanding trading charts is a fundamental step towards success in financial markets. So with that being said, let's dive in. Trading charts come in a variety of different formats, and the most common being line charts, bar charts, and candlestick charts. A line chart provides a simple representation of price movement over time, where each data point is connected by a line. This is the most simple type of chart, giving clear visualization of how a security has been trading over a specific time period. The only real benefit to using a line chart is simplicity, and the fact that it's beginner-friendly to identify what the price of a security is doing and identifying support and resistance zones, which we'll discuss later in this video. In terms of the information line charts provide, it doesn't really stack up to a candlestick chart, given that we only see the current or closing price of that security and have no information on price highs/lows in that specific time period. As a result, I would recommend taking the time to learn other types of charts, only using these as a complete beginner. A bar chart displays price using multiple price bars, with each bar representing how the price of a security moves over that specific time period. Each bar typically shows the open, low, high, and closing prices. The vertical line tells us the high and low prices for that period, and the small horizontal lines tell us the opening and closing prices, with the left horizontal line reflecting the opening price of that bar and the right line reflecting the closing price of that bar. Bar charts provide more information than a line chart, as we see where prices open and close for each bar, along with high and lows for that specific time period, which makes it easier to determine price action and volatility. The last and most commonly used chart is called the candlestick chart. This is somewhat similar to a bar chart, with each bar showing the security's open, close, high, and low price for that specific time period. Candlestick charts tell you what price is doing at any given period depending on the time frame you are using for that chart, whilst giving you a clear picture on what price action and momentum is occurring. For reference, I will be using candlestick charts in my future videos when trading, and let's dive deeper to understand exactly how to read a candlestick chart. The main rectangle, generally green or red, is referred to as the main body of a candle. Green candles are termed bullish candles, and red candles are bearish candles. Looking at a bullish candle, for example, the bottom of this rectangle is the opening price of that candle, whereas the top is the closing price of that candle, and the opposite for a bearish candle. A candle is referred to as bullish or green if the current or closing market price is higher than the opening price for that specific candle or period. When I say period, each specific candle represents the price action of the security over the time period that is selected. We can select what time period we want to look at, and there will be more on this later. You'll also notice that candles tend to have vertical lines extending from the main body. These are referred to as the wicks or tails. Now, the body of a candle remains the same despite us introducing this new term, the wick. Wicks give us additional information representing the highest and lowest price of the security during that time period. Now, let's explain this on a chart of the S&P 500 ETF, commonly known as the SPY. What I'm looking at is the 1 hour chart, where each candle represents 1 hour of price action. The big red candle shows us that in this hour, price opened just above 437 and closed at around 434.5, indicating this was a bearish candle, with the lowest price during this hour hitting lows of 433.6. The next bullish candle right next to it shows us that price opened at 434.5 and closed higher at around 436.7. During this hour, price actually hit a low of 434 and a high above 438, and you get the idea. We can start to draw some rough conclusions indicating that SPY is on an uptrend, making higher highs, and even that around the 434 region is a support level, as 2 times it tried to break below and failed, resulting in more bullish candles. I've mentioned time periods a few times in the previous examples, and it's important to understand what time frames are in the context of trading charts. Time frames represent exactly how much data is represented in each candlestick, which is chosen in whatever charting platform you are using. You can select endless options such as 1 minute, 15 minute, 1 hour, 1 day, and even as far out as weekly and yearly candlesticks. These are used differently depending on what kind of trading or investing you are doing. If you have a scalping strategy that is speculating on short-term price action and aiming to profit on these, then the 1 minute or even less than 1 minute chart will be the most useful. If you have a swing trading strategy where you plan on taking medium-term trades and want to identify trends to get in and out of a position within a few weeks or months, then the hourly or daily chart will reveal the most information for you. Lastly, if you're an investor wanting to put your money into a long-term growth position, you may be more interested in a weekly, monthly, or even longer time frame where you can clearly see the growth potential for a stock and the direction it's moving in. Changing a time frame is simple. On TradingView, for example, you simply click this button at the top near the security code and you're presented with endless options on what time frames you want to choose. Now that you know how to read a chart and select your desired time frame, let's see how we can use this to identify market trends. Here's a screenshot of the SPY 1-day chart where each candle represents 1 day of price action. You can see this in the top left with the D icon indicating this is a daily chart. We can see at the beginning that the SPY was on an uptrend, making higher highs and lower lows, reaching a peak of 480. This was near the start of 2022, which was the highest the SPY has traded. Following this, we proceeded to begin a downtrend, lasting as much as 9 months. We can see this in the chart as the SPY makes lower lows and lower highs. This was during the period where interest rate hikes began occurring, so there were fundamental reasons that caused this, but if we didn't know, the chart tells us this story as well. For the remaining 9 months until now, we again see the market reversing into an uptrend, again indicated by higher highs and lower lows. We're now close to 460, which looks to be an interesting level, and we could classify this as a resistance. We saw previously when the market was trending down that it struggled to break back above 460 twice, so this might be an interesting level of resistance that many investors are watching and they will be curious to see if we can break out. Secondly, 480, which is the all-time highs, will be another interesting level. If price can break above this, we can see momentum to the upside as it reaches fresh highs and has no key levels to stop it. I will create a new video going more in depth into support and resistance and technical analysis as a whole, as this can open up a whole big can of worms. So you can clearly see just how powerful using charts for analysis is. And this is one of the many ways traders and investors gain conviction into taking a trade or a position. I hope this was helpful in understanding the basics of trading charts and how to use them. Make sure to stay tuned for upcoming videos where we delve deeper into trading and I take you through more topics I'm learning in my journey of becoming a successful trader. Like, subscribe, comment, and see you all in the next one.